Islamic finance, alhamdulillah, we have now reached a stage where each has its own area of mandate which it works on. Like AOFI is being there for a number of years now, nearly 30 years now, and it's contributed immensely in the Sharia standards and accounting and auditing, as well as governance standards. IFSB also have come along, in terms of providing the regulatory and supervisory and governance standards, which definitely help in the orderly development of the industry. And also an IFM, which take care of the documentation and product confirmation needs. And I will briefly mention, some of the things which perhaps will be maybe useful for the listeners. And then we have SIBAFI also, which take parts in the information in terms of providing capacity building. And so there are about 6 of them, but I have mentioned the 3 main ones in SIBAFI. We have, if you generally look at it, even, we do some surveys and based on that and institutions. So we have, alhamdulillah, there is improvement. So our standards are generally in the hedging is 150 institutions as per our survey and discussion with the institutions based in 18 countries. So it's not 18 countries are imposing. I wish that happens in one day. But that's something which we basically have achieved in the hedging, which IFM is a pioneer. So this hedging, if you look at it, it is covering about the risk mitigation. And that is very important. Both if you see in terms of 2008 financial crisis, when there was a great deal of uncertainty, you have a lot of volatility. Of course, Islamic finance in many places is not only domestic currency, but it is hard currency. So you see most of the sukuk could be in dollar, international sukuk, or could be euro, or could be sterling. So that has to be managed. So we are not talking about hedging, it's normal derivatives and all, that's different, but this is pure sort of risk mitigation, which is very important. Same to do with we use, and I will, in my session, I will cover the benchmark rates and how they are used. So naturally, when we use benchmark, there is, changes global which affects us. So that is also something which we provide. And the overall, the main sort of a master agreement which we have developed, although IFM takes care of when the development takes place in terms of the process itself and Sharia guidance and market consultation exercise. But we have seen in the hedging, working with ISDA, that we have able to create a separate Islamic master agreement, which is being used now by many international banks, Islamic banks and others. And that's something which we continue to work.
As the previous panelist mentioned, Pak Rahmatullah and Mr. Ijlal, there is definitely a need for establishment of an Islamic benchmark yield curve globally to serve, as a price reference for the Islamic financial market. At the moment, it's still missing, but as Mr. Ijlal mentioned, in several jurisdictions, the local regulator, like Bank Indonesia or Bank Negara Malaysia, is issuing short-term instrument and building a curve in local currency for the Islamic money market. Now, the Islamic financial market mainly use conventional benchmark that rely on interest rates. We all know that. This was initially allowed by the scholars, as an exception, but now we need to move to really build this Islamic benchmark curve. And of course, in the past, there have been several experiments to create this curve, including the Thomson Reuters Islamic benchmark rate curve, in cooperation with Reuters, AOFI, and Bahrain Association of Banks. But of course, there have been some impediments to become a widespread benchmark, and the rate was not very popular because faces one of the deficiency that the LIBOR has actually, which is subjectivity. So what do we really need right now? We need to build a critical mass of short-term issuances in order to have an efficient market. And as Mr. Ijlal said, the size matters. So what we need is a large supply size, a deep market to have an active secondary market with decent bid offer spread and a typical benchmark size transaction. Also, what is needed is the issuances to be consistent in several different maturities to be able to address the market demand, because Islamic banks or Islamic financial institutions have different funding needs and investment requirements. Transparency, we need benchmark rates that are transparent, easy to compute, actively traded on secondary, and safe enough to not be manipulated. And this is all the purpose of the LIBOR transition that we are going on through now. I mean, the market globally is going through transition from this LIBOR benchmark, which is based on contribution from several banks out of London, to a collateralized secured overnight financing rate, also the SOFR, which is based on transaction actually. So based on real asset securities backing this benchmark, where bank and investors borrow and loan, treasuries overnight. So at the ILM, what we have been doing for the past 7 years. So we have been established in 2010, and we started issuing short-term sukuk instruments in the market since 7 years now. And what we are trying to do by fulfilling our mandate, which is providing the market with Islamic liquidity management solutions, and also to create the first global Islamic benchmark yield curve. So what we are trying to do is to be a stable and regular issuer, to offer sizable Islamic liquidity tools on a regular basis. Of course, to be a frequent issuer, so we offer a suite of different tenors. Currently, we are focusing on the 1 month, 3 month, and 6 month. But our short-term program allows us to issue from 1 day up to 1 year.
When we talk about the Islamic fintech, it means we talk about the technology-based innovation, which is created to facilitate business activities in the financial industry, which comply with Sharia principles. This is the very important definition, because we talk about the tools for the industry, how to develop and how to improve the market. An Islamic fintech, it should be facilitating the market access, increasing market efficiency, expanding market deepening, and delivering lower transaction costs. This is the definition and the values, and we had when we build the system, when we transport the fatwa, become a system. We use these values because I believe with all these values we can create what we call it maslahah about the system to the industry, to the public. All the data, okay. In the Indonesian stock exchange, the IDX, created one of the platform, we call it the Sharia online trading system in 2011. And this is, I believe, this is the first Islamic fintech in the world that convert fatwa into online trading platform that meet Islamic principles, and this system used by retail investor as a tool for investing in Islamic stock. Because we believe the data said we live in technology, we live in with the 68% population, a young population. We live in the huge island. We have a lot of island. We live in the 86% of Muslim population. So we create the system, can connect it, all the data. We create a platform to increase our performance, the industry.
Coming into a focus on the FSB 21, yeah, because it's mainly taking the concentration on the Islamic capital market. The main objective of this principle is to set a principle for the supervision of Islamic capital market. And we have at least 3 main points here. the first minimum international standard, which is to provide a minimum international standard for sound supervisory practices. Because FSB standard is to be referred by the regulator, also by the market player. So first we provide minimum international standard for the supervisory. And then secondly, Sharia compliant disclosure. It is to protect consumer and other stakeholders by ensuring that the claim to Sharia compliance is sound and supported by the appropriate disclosure. And then the last but not the least, soundness and stability of the Islamic capital market, which is to enhance the soundness and stability of the Islamic capital market. And then what are the contents of this principle in detail? Yeah, some of the content that I might share here in this event. First, we address on the issue of a regulator and self-regulation, mainly addressing the importance of the responsibility, independence, and power of the regulator. Yeah. Again, another principles, we focus on the Sharia governance, which is CPICM number 10. Yeah, the Sharia governance should be upheld for all products, activities, and services. And then another one, to enforce the securities regulation, particularly to enforce the system for the regulation and also the power of the regulator to implement the enforcement system. And in cooperation in the regulation, we address the importance of information sharing for domestic and international cooperation.